The Australian dollar continues to track the global risk mood closely. March was of course a month of deep risk aversion, sending the Aussie dollar into an 11-cent tailspin in less than 2 weeks. That was followed by a swift improvement in global market sentiment in April as fiscal and monetary policy safeguards came into play and partial economic reopenings gathered pace. That prompted a sharp reversal higher in the Australian dollar. For the month of April, the Aussie dollar was easily the best performing major currency with a gain of more than 7%. So far in May, the Australian dollar's impressive run-up has lost some of its steam, though it isn't looking overly fragile either, the currency settling into a rough 64 to 65 cent range this week. But given that the Aussie's sharp rebound in April coincided with a rapid improvement in Australia's COVID-19 situation, some are asking if further gains may be in store, with the government likely to recommend some loosening of the current restrictions that are currently estimated to be costing the economy about $4 billion a week. Australia is indeed among a select group of advanced economies that have so far contained the outbreak. Two very distinct groups amongst the developed economies are beginning to form more than 3 months into the COVID-19 outbreak. Those countries where the growth of new cases has slowed markedly, such as Australia, New Zealand, Germany and Japan, and those countries where the growth of new cases remains uncomfortably high, such as the US, UK, Sweden and Canada. Within this latter group, some very different containment approaches are being followed, and the best that can be said is that the growth of new cases has plateaued at a very high level. Those countries that outperform in COVID-19 containment are surely better placed to come out of hibernation and to transition to a more durable recovery, compared to those still struggling to flatten the curve. The US's piecemeal state-by-state approach to reopening business activity at a time when the outbreak has yet to meaningfully decline anywhere except major metro areas such as New York, casts considerable doubt on the economy's ability to rebound from the current collapse in GDP and the surge in employment. It's an ongoing open question, though, whether markets will take heed and mark the currencies of COVID-19 outperformers higher. The US dollar, for example, found strong safe haven demand in March, even as the US became the epicenter of the global outbreak and the economic outlook there deteriorated rapidly. To this day, the US dollar still retains a safe haven premium. Traditional drivers of currencies such as interest rate and growth differentials could weigh on the US dollar and help the Australian dollar, but that may not be a story for currencies until late 2020 and 2021. We suspect COVID-19 outperformers like Australia will need to demonstrate sustained growth outperformance, perhaps over several quarters. Time will tell. The Australian dollar is, of course, driven as much, if not more, by global developments. And while Australia has made strides in its containment efforts, there has been no appreciable improvement at a global level beyond a plateau. And therein lies the Achilles heel for the Aussie dollar, and it's hard to make the case for a sustained global recovery. Ongoing pressures on households and corporates to repair their balance sheets across the major economies, not to mention likely high structural unemployment, as some industries are slow to recover, such as tourism, will likely thwart any meaningful global growth reboot. The next few months will also see a continuing run of brutally weak global activity data. We expect these global trends will continue to be far more important for the Australian dollar near term, capping recovery prospects. US-China trade tensions are simmering once again too, and could escalate into the November US elections, capping the global risk mood. Our end June forecast for the Aussie dollar is 62 cents, and confirmation of a huge drop in employment on 14 May could be one catalyst for a renewed Aussie dollar decline.